Today's video is sponsored by Forex VPS. If you've never used the VPS for trading, it allows you to access your trading from anywhere and have 100% uptime, so no interruptions from power outages or Wi-Fi being down can mess you up or get you in any sort of situation. This is especially great if you're somebody who trades with robots or expert advisors on your MetaTrader 4 platform. With Forex VPS, you get near instant execution from anywhere, which allows you to access your VPS, basically get onto your trading system from anywhere, and you have 100% uptime guaranteed. And when you sign up for Forex VPS, you actually get access to How to Trade, which is an educational website, and you can track a trader, which is similar to MyFXBook, where you can watch performance over time. So if you're interested in Forex VPS, use the link down below in the description to get a 7-day trial plus 20% off using the code and link in the description down below. We are going into a very meaningful week in the markets. In fact, if you haven't already heard about this week and why it matters so much, stick around to the end of this video as I help to prep for all of this craziness. Okay, so over the last 50 years, the S&P 500 has experienced an average gain of 0.54% during Thanksgiving week. Now, if you're outside of the US, here in the United States, we celebrate Thanksgiving I think it's the third week of November. And during this week, US people, they get together with their family and they basically show thanks for what they have. It's an awesome kind of holiday that we do. And during this time, historically, 68% of these past 50 years, we have seen positive returns on the S&P 500. Now, not all of you guys trade the S&P. Some of you guys trade gold, you trade Forex, whatever you trade. This is still very meaningful because other risk assets may also appreciate if this trend comes true this year. This is a notable increase compared to the average weekly gain of 0.16% observed throughout the year. The Dow Jones market data supports these findings. Their analysis, stretching back to 1950, indicates that the S&P 500 has risen 49 out of 72 times during Thanksgiving week, equating to a 68% success rate. On average, the performance was 0.6% during the holiday week. Now, what's notable here is this. Usually, on average, the S&P 500 goes up about 0.16% week over week, but 0.54% on average is a remarkable difference. Not to mention, there's a few other factors that I've already mentioned, and I'm going to head over to the chart and I'm going to talk about them with you. So it's no secret that I'm already a bull on the S&P 500. I bought at the beginning of November inside of our signals group, and this one has become the best trade of the entire year for me. In fact, I actually have 2 positions open, both on the S&P 500. So this is SPY. I also added to the trade right here with VOO. This is also the S&P 500, same trade, and this one's also up $6,000. So it's been a monster trade for me. And I don't say that just to brag, because before this, as I've mentioned many times, I was in a pretty substantial drawdown in my account and I talked about it pretty openly. So it's nice to have one that's really running for me, but I want to talk about why this has me still bullish on the S&P despite this big run up so far. Thanksgiving week is a nice positive seasonal trend that we can observe in the markets. But on top of that, let me talk about something else. Next year, we have elections. And Chandler, if you would just pop in some text here for me on this. We have elections next year, which of course, usually a president is going to want to window dress a little bit for their upcoming election. Nobody wants to go into the election with a stock market that's getting beat up, which has been a really tough couple of years here for the S&P. It's been pretty sideways overall, and perhaps a nice little win in the S&P department would help to improve votes, right? That's something to think about, and it actually holds up seasonally, where again, we talk about seasonality often. Historically speaking, the last year of a presidential term generally sees the stock market go up, and in fact even up more so than the average year. So we have that. We also have, as I mentioned earlier, the second point here, which is Thanksgiving week. So you add those 2 things together, and you have a inflation figure that's going down. So we could say for this third point that the Fed is less hawkish. So you combine all 3 of these things, in my opinion, the path of least resistance for stocks is and has been to the upside. And so I still am long, and this is why when you take a look, you might see that I haven't taken profits on this. I've ridden this thing all the way up and I haven't taken profits. It's because factors are still pointing bullish, and I don't just take profits just because we hit resistance. When markets are truly in uptrends, which I think that the S&P is currently in, if it's in an uptrend, resistance is just pause points, not reversal points. That's how I'm approaching the S&P. And of course, I could be wrong. And if I am wrong, I'll trail out for a profit here. But now let's also talk about some of the other markets out there that I know some of you guys care about. Let's take a look at the euro. The euro is also seeing some nice gains. Is it for the same reasons? Well, yes. Remember when I just talked about the Fed less hawkish? Well, it's driving the dollar down. A weakening dollar is helping things like Euro USD and Pound USD to see further upside. Now, these are things that we are going to be watching for. And I should also mention that if you have not already heard, we are currently doing a Black Friday sale. You can actually get currently 45, I know it says 40%, but you can actually get 45% off if you direct message us using the first link in the description. This is our Black Friday week. We are launching some wonderful, big, all store-wide discounts on our membership group, the VIP signals that we offer, coaching webinars, and of course, also the Edge Finder, which is our premium market software that we use to help capture all this data that helps me find the trades that I take. So if you would like access to anything from our store, again, that includes the VIP group, as well as the Edge Finder, which is currently also 45% off. It is our biggest discount of the year. It's the best time of year to get a copy, and you can do so by clicking the first link in the description and chatting with someone on our support team about the product. The reason we do that this way is so that you can direct message us, ask a few questions if you have any about what we offer, and that way we can also see if it's the right fit for you. We don't just want to sell you something, we wanted to make sure it's the right fit for you so that it actually is beneficial to you in your trading career. So message us using the first link down below. It's totally free to do. Even if you would just like to ask a few questions, feel free to do that by messaging us there. So again, when we talk about that dollar trend, which continues to be pretty dang bearish, I think that this could be really interesting. Now, I've made this point. Be very careful. If you're somebody who is bullish on the dollar, be very careful, because sometimes people are going to say, hey, Nick, it's at the bottom of this channel. It's due for a rally. It's due for a bounce. And while that may very well be true, here's the issue. If you look at it here and you say, well, hey, Nick, it's due for a bounce, that bounce very, very shortly kind of came into play, but then dropped right back down. I think it's possible that throughout the rest of this year, the dollar continues to just drift lower and lower. And so I think being counter trend here is very, very tricky. And in my opinion, not what I'm wanting to do. In fact, if I'm going to trade the dollar, whether it be the euro dollar or gold against the US dollar, what I'm going to wait for is perhaps that trend does start to find a little bit of a bounce. I will be looking personally for opportunities to go against that counter trend move in favor of what I think is to be a bigger secular trend to the downside on the dollar index. So again, we could also take a look at things like Pound USD. If you're somebody who's trading the pound, this thing looks really, really solid, right? Risk on assets doing very well alongside the stock market in the US. And it makes sense, right? You're seeing, again, that dollar downfall is allowing some of the more risk on assets, like, for example, the pound or the euro against the dollar, to really have their day in the sun, if you will. And I think that that's set to continue throughout the end of the year. Will that be the same in 2024? I think, Ivan and I were having this conversation on stream earlier. He said that taking it month by month and being data dependent, similar to how the Fed has indicated they want to be, I think that's a really good strategy. And I agree with Ivan on that quite a bit. So if we take a look now at gold as well, some people might be wondering, well, why isn't gold getting all the same love that the euro and the pound is? The dollar's weak, so why isn't gold rallying? Well, here's the thing. The gold market is a little bit suppressed by how the economy seems to be still holding up pretty well. Again, remember that gold typically has really massive outperformance if and when we see strong or very, very weak economies around the world, right? fear is what can cause the gold market to rally suddenly, like it did over here when we had the Middle Eastern conflict flare up between Israel and Hamas, right? That situation massively, rapidly rose the price of gold. I think it was like something like 10 or 11% in just like 1 month. Take a look here. So we can go from there to there. Yeah, almost 11% rally from the bottom here. That's a big jump for gold, which historically does not move all that much. So if you're looking for the gold run to happen again, what you need is probably some fear to come back in the market if you're looking for a massive jump. However, I think that the likely scenario is that the dollar continues to drift lower and we could see gold drift higher. Not massive rally higher, not sudden surge to the upside. I think a slow and steady rise on gold is kind of my base case for what happens next. Now again, if you're trading this from a price action standpoint, you could get a nice little entry going here at current support levels, and I don't hate that idea. And then the next stopping point would be a target up into this area, 1996, and then perhaps we take a pause and see if we can get into the 2000s. But again, I think the path of least resistance right now is a pullback, continuation, pullback, continuation. That's going to be my default scenario for gold at this time. I don't have any trades on gold at this time. I think that for now, I am already kind of betting on the dollar index continue to go down based on my S&P long, but I am watching gold for possible indications on the Edge Finder. Here's a quick look at COT data, by the way, guys, if you are not already using the Edge Finder. As I mentioned earlier, it is currently 45% off. You can message us using the link at the top of the description, but here is a look at the latest COT data. So when we take a look at this, what we can see here is that you've got the euro looking pretty bullish this week, silver, dollar. That's a little bit interesting. But again, we also have on the sell side of the overall data, we have things like NAS, pound, Kiwi, yen, Australian dollar, oil, and actually gold as well. So a little bit of concerning data there in terms of kind of counteracts what I was just saying about those things, but you are going to get some variance week to week. And I think it is also important to take a look at the overall weekly chart of the COT data. If you do not have access to the Edge Finder, again, you can click that link down below to get your copy. But here is something to consider when we take a look at gold, okay? So gold, if you take a look at this, the weekly COT data here, we can see that there's been a sudden surge in bullishness on the gold component of COT. So institutional money seems to be getting long gold in recent weeks, and though it has kind of leveled off this past filing, you got to kind of take a look at the trend going on, and this is why we've included this week-to-week trend chart. You take a look at the dollar, it's been pretty flat. You look at gold, it's been increasing. So I think that that's a nice storyteller. Yes, not the most shiny, pun intended, week for gold here in terms of COT data, but you look at the week-to-week overall, I think it's still a nice positive trend that's going on. So we'll continue to monitor that. And again, get yourself a copy if you want to use this data on your own time. If we take a look at the top setups algorithm, here you go. I am still bearish on oil. I tried to get short oil, did not work out. So I'm going to watch that one for possible re-entries this week. And on the bullish side, in terms of new setups, possibly pound yen could be interesting. I am still bullish pound CAD. That is a trade signal that was shared inside of our VIP group. I'll show you pound CAD. I'm still long on this one. So here is GBP CAD, and we just topped out. This is not a take profit level, by the way. I'm just trailing stops. My stop is trailed behind this market structure low, still in profit on this trade, and I think it is actually time to trail stops. So shortly after this video, I will be trailing stops. Members, you can keep an eye on that inside of the VIP group. I'm going to probably move my stop right up to this point. Now that we've kind of found support here and pushed off of it, as long as we hold that, I'll continue to hold my GBP CAD long position. And again, if you are not already in the Discord, you can get all those signals sent to your phone or to your desktop by joining with the first link in the description down below. Thanks guys for watching. Have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.